Welcome back. I'm Pratap here. Today is the 24th May 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated during the week 19th May and 23rd May in between. So during this week, we got 13 trades, and out of 13, 10 are successful trades. Let us focus on them. And TI India is a very interesting trade that gave 5 trades. Strictly speaking, 6 trades. So one is a PRs or zone strategies, but we will discuss that, even though it is not part of HLQ zone strategy. Even before that, please note, we are providing complete free training on supply demand zone price action. To access all the training lessons at our homepage, click on the tab posts. Some of you might be seeing community tab. You click on the tab in that case. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. The same playlist link also provided in this video description also. From there also you can access. Once you click the link, you get access to all the training lessons. You just scroll down to the bottom of the page. At the bottom of the page, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these training lessons one by one, but according to my training instructions. I provided the training instructions at our Telegram channel, and the Telegram channel link is also provided in this video description, or you can also find the link here, the Telegram channel link. So join at our Telegram channel. Once you join at our Telegram channel, you can find the training instructions and learn this course according to those training instructions. Then you will become a very good independent trader in the coming days. Okay, now let's get into quickly evaluate all the HLQ zones that are got triggered during this week. Starting with 19th May, we got one stock, that is IndusInd Bank, 75 minutes HLQ zone, supply zone has been executed. This is a drop-based drop identified by our software, and this 75 minute zone is fine-tuned with 15 minutes. Inside 15 we have a fine-tuned 5 minutes. Let me directly show you 5 minutes time frame. So here in the 5 minutes time frame, just before the 15 minute zone, we have a lower time frame zone horizon, rally base drop. Again prices entered, once again you see rally base drop is created, and this is the area we got the trade today. Today means on 19th. So here prices entered, the zone is slightly pierced, but it is within the stop buffer, and after that it achieved 1:3 RR. So that way Indus Bank gave you a profit 3,700 rupees, which is 3.3% ROI as per one futures margin cost. So that is the only trade executed on 19th. On 20th, Hero Motors trade is executed. This is a 75 minutes demand zone, rally base rally. This is the stock moving between demand and supply zone, 75 minutes high liquidity demand and supply zones. And on 20th we got a trade on this demand zone, rally base rally, and this is fine tuned with 15 minutes. Actually we have a 15 minutes horizon is there. Within the horizon again here we fine tuned 5 minute zone is created inside the 75 minute zone. Let me go directly to the 5 minutes time frame. See here we have a fine tuned 5 minutes rally base rally. Exactly, this is a very small institutional order flow. In this area we got the trade, and this is also, did you notice, slightly pierced but within the stop buffer. Hope you all understood the importance of stop buffer concept that you learned in our training course. I think in lesson 19, if I am not wrong, in lesson 19 you learned stop buffers. Previous trade and current trade both are saved because of these stop buffers. Not only they saved, they gave you 1:3 RR after that. So this is also achieved 1:3 RR. That way Hero Motors gave you a profit 3,157 rupees, which is 2.8% ROA as per one futures margin cost. And one more, Wipro is also executed on the same day, but it is violated. Wipro is having a fine-tuned 5-minute zone that has been violated. But did you notice it has been tested several times? I mean, couple of times. So obviously it is violated. It may not be high liquidity, but you may not be taking the trade in this zone because it is already a tested zone. Or if anybody would have felt this is a high liquidity zone, you might have taken a trade and your trade would have been stopped out. But anyway, that is happened almost at the closing hour of the market. But we didn't plan because it is a tested zone. Similarly, Tata Steel. Tata Steel is also violated at the morning 9:15 candle. So this is the morning 9:15 candle, 1 minute candle. We are in the 1 minute chart, Tata Steel 1 minute chart. This fine-tuned zone is also, so here morning 9:15 itself, it just reached the digital line of the zone. Because the zone is consumed all the order flow, definitely you can't plan a trade in the next candle. Okay, that is what happened on 20th. Now in 21st May, during the intraday, a very interesting happened on TA India. It gave you 6 trades, but we considered only 5 because of the HLQ zone strategy. And the 6th one also I will show you, but I'm not capturing those statistics because that is completely based on pierced zone strategy that you learn in our lesson 28. In our training videos, lesson 28, that is available at our YouTube channel. A very powerful concept. You have seen Nifty's entire move in the recent time, that has been captured from the pierced zone only. Few weeks back we discussed Nifty. So that is the power of pierced zone strategies. So just I want to explain that concept also. First of all, this is a 75 minutes high liquidity zone, rally base rally, and also it is a 75 minutes high liquidity supply zone, drop base drop. This stock is moving between high liquidity demand zone and supply zone. This is the point you should understand. Drop, 2 base candles and drop, that is what our software identified, and also this is a rally base rally. And if you observe, both these zones are almost near to each other. That's why we get trade opportunities on either side. So we captured today means on 21st May. On 21st May, we captured trade opportunities on both sides. Okay, this is a fine-tuned 5-minute zone. If you observe carefully, this is having a fine-tuned, 2 fine-tuned. Here there is a 15-minute zone here. Here also there is a 15-minute zone. Inside 15, here we have a drop, base candle and a drop candles. Here imbalance started from here and follow through candles happened. That way fine-tuned 5-minute zone we have drawn here. And also rally base drop. Actually it is a drop, 3 base candles and a drop candle. But what I did, I just drawn within the zone to manage the risk management. And again rally base drop here. And what about here? Here we have a 15-minute zone. Inside 15, recently a drop base rally is created, drop base rally. This is a fine tune. Apart from that, it is also having a lower time frame zone origin. Did you notice here? Drop base rally. And this has been testing several times, but anyway, it is the origin for this entire 15-minute zone. Lesson 22 concept. Lower time frame zone as an origin to the higher time frame. This 5-minute zone is the origin for this entire 75 minutes high liquidity zone. How powerful this origin you will understand in this discussion. So these are our trade plans. This is the first one, this is the second one, this is the third one, and this is the fourth one. That means we have one fine-tuned zone in the demand zone and also one 5 minutes origin. Here in the supply zone, both are fine-tuned zones. Once market is started, what happened? So let me explain step by step. See, market is started. See, now we are looking at the 1 minute chart. Morning 9:15 1 minute candle. See the timestamp. This is this is morning 9:16 candle. 9:15 we ignore the trade, but 9:16 you got a trade, right? You got a trade in morning 9:16 candle. It is a valid trade 9:16. But the blue color line I have drawn is the stop buffer. Is the stop buffer has been hit here morning 9:16? That means your trade, you got a trade in 9:16 candle. After you took the trade, immediately it hit the stop buffer. That means 9:16 you took the trade and also you exited the trade with stop buffer. That means we got a loss here. Our stop loss has been hit. So the first trade on TI India is stopped out. See here, TI India this is the first fine-tuned 5-minute zone. This is the second fine-tuned 5-minute zone. The first fine-tuned 5-minute zone is stopped out. You got a trade at 9:16 candle, because 9:15 candle we ignore. See the timestamp here, 9:16. 9:16 candle, you got the trade and also it is stopped out. Okay, fine. How much loss we got? 1,380 rupees loss, which is minus 1.2% ROA. Okay, because the trade is stopped out here. Is it good or bad? It is part of the trading journey, but our money is released immediately. It didn't struck up. Okay, we got a loss, maybe around 1,380, say 1,400 rupees loss we got. But our money is released. Same money you can plan for another trade. That is the advantage. Actually, I say it is a good thing. Good thing stopped out, because it quickly happened, everything in 1 minute happened. That way our money is released. Okay, fine. After that, what happened? Okay, we booked the stop loss. After that, again price entered in the above fine tune. So that means this zone is gone. That's why, did you notice I deleted that fine tune 5 minutes? You may ask a question, still why I kept this 15-minute zone? Did you notice the 15-minute zone I did not delete? Because these are the 1 minute candles. Please remember, these are the 1 minute candles. When you got the trade 9:21, you got the trade in the fine-tuned 5-minute zone. Why I did not delete this 15-minute zone, I will explain. First, focus here. The first fine-tuned 5-minute zone which I deleted already stopped out. That's why we booked the loss. Now we got second fine-tuned 5-minute zone. We got the trade. See, TI India second fine-tuned 5-minute supply zone trade is triggered. Okay, you got the trade. What happened after that? After that, prices came down, finally reached the 15-minute zone here. Of course, within the 15, we fine-tuned to 5 minutes time frame. Maybe probably you could book the profit here, or you can also book the profit here. Either way, because the real order flow is there. If anybody hold it up to here, the zone, starting of this zone, somewhere here, if you book the profit, you would have got a profit 8,700 rupees profit, which is 7.8% ROA. This is a TI India second trade from the supply zone. See here, first trade is stopped out here. We booked the loss. After that, you got a trade, and then it reached the target when 942. 916 your trade is. So after that, 917, 18, 19, 20. Maybe in 920, 921 minute you got the trade. 942 you booked the profit. So less than half an hour you booked the profit. Less than half an hour you got a profit 7.8% ROA as per one futures margin cost. Excellent. Okay, fine. But now if you observe carefully, prices sharply came down, right? This entire 15-minute zone, is it violated? No. This zone is not fully violated. It is a pierced. Let me show you 15 minutes chart. But before that, let me complete one more topic. Here, not only you book the profit, the fine-tuned area, again long trade is triggered here. Did you notice? TI India fine-tuned 5 minutes demand zone trade is triggered. So definitely here you have to take a trade. Not only you book the profit, you also expect again prices from here it will move up. Because pierced zones can be used as a target zone. Why target zone? Because while prices are coming down, new order flows may create that may prevent the prices to go up. That's why you land in pierced zone strategies, or even in pierced zone. When I explained in phase 1 training, I clearly told you pierced zones can be used as a target. So that's why our target will be till the pierced zone. Right? So that's why you will take immediately, you not only book profit for this trade, you will also take another long trade here. Okay, let us assume you took the long trade. So this is the third trade of the day. First trade is stopped out. Second trade is a successful trade that gave you 7.8% ROI. Third trade again you got here. Once you take the third trade, see what happened? Prices moved a little up, but not good enough. It did not reach even 1:3 RR. It came down and finally our zone is violated. The blue color line, what I am showing you, is a stopped out trade. Your trade is stopped out. Because our trade is stopped out, this demand zone, we got another stopped out trade today. So far we got one successful trade and including this 2 stopped out trades. Total 3 trades are executed. First trade here stopped out. This is the second trade. And third trade here again stopped out. Either without reaching 1:3 RR or till the 15 minutes. One of them has to be achieved. None of them are achieved. That's why it is a stopped out trade. So you have to book the profit at this blue color line, including stop buffer. Blue color line is stop buffer. So you got 1,425 rupees loss, which is minus 1.3% negative ROI. So far we got one successful trade, 2 stopped out trades. Okay, fine. Next, what happened? You already seen. While it is stopped out, it gave you again a trade here. See the candle? We have this is the lower time frame zone as an horizon. From the lower time frame zone horizon, it gave you a trade. So you have to take this trade. Because lower time frame zone horizon, you can take as many as trades until it is violated. That is the rule. So this is the first time prices entered here. You got the trade, and after that what happened? See, after that prices reached the pierced zone. See, this is the pierce. This is the 15 minutes chart. See, 15 minutes chart, the candle is not closed outside. The candle went outside. See, the wick went outside the zone, so zone is pierced, and after that price again came down and closed inside the zone, not outside. So because price is closed within the zone, you call this as a pierced zone. Of course, price can be closed here or even below also, below this zone also, but definitely not above the zone. It should not close. So it is a pierced zone. Pierced zones, you have 2 advantages. One advantage, you have to book the profit, not the upper one. Why? Because while prices are coming down, institutions may create a new order flows. Those order flows will be much stronger. That is what you learned in lesson 28, pierced zone strategy. Okay, anyway, it reached the pierced zone, we got the profit. Here you have to book the profit. So where you got the trade? Here you got the trade in the lower time frame. This one is stopped out. We already booked the profit loss here in this zone. But after that, again we got a trade from lower time frame zone horizon, reached the pierced zone. Here you have to book the profit. So that way TI India long trade gave you 7,545 rupees profit, which is 6.8% ROA as per one futures margin cost. So meanwhile, once again prices come down to this zone, you got a trade. Why prices came down from here? It went to the Pearson zone, fine, we booked the profit, fine. After that, why prices came down? Definitely in this area, there is a order flow. See here, you have a rally-based drop. This rally-based drop pushed the market down. You may ask a question. Okay, forget about HLQ zone strategy for some time. Can we take a trade from this zone? You can take a trade, but not HLQ zone strategy. That is the Pearson zone strategy. But if you take a trade, intraday trade, the risk is very high. Rally-based drop. Why risk is very high? See the risk, a very big risk. Earlier, this is the 15-minute zone. More than 15 minutes, you have 5-minute zone. Order flow is there. Because the risk is high, what you can do? You can look into 3 minutes time frame. Any 3 minutes order flow there. If the risk you can manage, you can plan the trade. See here, 3 minutes time frame. You have a drop, you have a base, you have a drop. This is inside 15 minutes. See, this is 15 minutes is Pearson zone. Inside we have this drop, base, drop while coming down. So that why, if you would have taken a trade here, see, you would have got a very good profit. Definitely you would have got another 7,500 rupees profit you would have got. Because here you book, earlier you took the trade, you booked the profit. Again you take the trade, here you book the profit. Definitely same amount of profit you would have got. But that trade could have been Pearson zone strategy. So that is the reason why I have not included this data in our Excel sheet. Look into the Excel sheet. TI India, I did not include Pearson zone strategy trade. Because Excel sheet I am noting only HLQ zone analysis trades only. HLQ zone strategy. You learned HLQ zone strategy in lesson 21.3.1 video. Okay, anyway, this trade is not based on HLQ zone, but those who already learned Pearson zones, they would have got another trade opportunity from this zone. That is what I am trying to tell you. Why we should learn so many strategies is because sometimes other strategies may give you trade opportunities. We should not miss them. Okay, anyway, this is the lower time frame zone horizon. It gave you another trade opportunity. What is the LT, lower time frame zone horizon? How we to trade? We keep on taking the trade until the zone is violated. So it gave you another trade. If you would have taken this trade, after this we have to take this trade. When it gave you the trade at 12 o'clock 15 minutes, it gave you the trade. See the time stamp. On Wednesday 21st May at 12 o'clock 15 minutes, it gave a trade. This is the lower time frame zone horizon to this entire 75 minutes high liquidity zone. First trade already gave a good profit. Second trade. Okay, what about the target? We have a new 15-minute zone is created. Here, see, 15 minutes rally, 1, 2, 3, 4, 5 base candles and drop candle. This new 15 minutes is the target, not the previous one. That's why I deleted that previous 15 minutes Pearson. Here we have a Pearson zone here, right? A drop, base, a drop. That one I deleted earlier, somewhere before. But this is the new 15-minute zone. This should be our target. See, the new 15 minutes leg out is created. In the next 15 minutes candle, we got the second trade. And this second trade again pushed at 13 hours. On 21st 13 hours, it reached the new 15 minutes zone. That way, it gave you a profit 5,220 rupees, which is 4.7% ROA. You know how much profit you would have got only on TI India on that day if you would have taken all these trades, including stopped out trades. TI India Here in the sum, 18,600 rupees profit you would have got. If you applied piercer zone strategy and if you take another trade, maybe another 7,500 rupees profit. 26,000 rupees profit you would have got. Including piercer zone strategy, you would have got 26. Those many trade opportunities TI India provided on 21st May 2025. Being a professional trader, we should not miss any of those trades. Because all are perfect trades, perfect analysis. Either fine-tuned zones or your lower time frame zone horizon trade land in lesson 22. That is HLQ zone strategy point of view. Pierced zone strategy point of view, you have seen pierced zone new order flows are very powerful. Though I did not capture pierced zone profit in this Excel sheet, still, but when you are doing trading, you have to capture that. See, my goal is to explain HLQ zone strategy performance. That's why I am making all these videos, because I am promoting HLQ zone. It is a new strategy. At least I am claiming it should give 80% success rate, average success rate, and also average intraday ROI 6%. That's why primarily, because this is the most successful trading strategy that I developed. That's why every day I'm capturing, because this week onwards I'm capturing on weekly basis, because I'm busy with software development for Forex support. For not only Forex, any market, 24 hours market, including bullion market, gold, silver, the international markets, even in Bitcoin, 24 hours market. At least some important scripts related to Forex and bullion I want to support in NeoStock software in next 2 months time period. That's why currently I'm working on that. That's why weekly now I am preparing this video instead of daily. So this is one learning from this video about TI India. Now let's get into the remaining trades quickly. So on the same day, 21st, United Spirits is consumed 9:15 1 minute. We have a two fine-tuned zones, but one is a tested zone. We didn't plan the trade. That is already gone. We have another fine-tuned 5-minute zone, but that is also gone in morning 9:15 candle. See this long wick. This is a morning 9:15 candle. So everything is gone on 9:15. The whole zone is also gone. But in the supply zone, this is price moving between these zones. So we want to capture trade even in supply zone, but unfortunately price did not went to the supply zone. Otherwise we would have got a trade in this fine-tuned 5-minute zone. So because it is a morning 9:15 candle, we won't capture these statistics. Because 9:15 we won't take trades as per the rule. 9:15 1 minute candle, we don't take the trades. So this is United Spirits. This is what 1:15 candle. This order flow is gone. This is morning 9:15 1 minute. And the next candle entire zone is gone. Okay, what about 22nd May? 22nd May, we got a LIC trade. And remember, LIC already I explained earlier. Last week, I have analyzed this zone. If you look into the old video, I have fine-tuned all this. This is a daily zone. Please refer old video. This order flow is there. Whatever we fine-tuned, from that order flow only we got the trade today. Earlier our software identified this as a rally, medium-sized candle, 2 base candles and a rally candle. This is how our software identified. Base candle, this is medium-sized candle, also part of the base. Here imbalance started. Based on that, our software recognized this as a leg out. So this we discussed in the previous week. Please refer the previous videos. So now directly let me jump to the fine-tuned 5-minute zone. So this is the fine-tuned 5-minute zones. All these fine-tuned zones we discussed in the previous, how we identified these order flows. Today in this order flow, we got the trade. So today we got the trade, and then sharply prices moved and reached the 15 minutes target. This is the 15-minute supply zone. And LIC has given 3,680 rupees profit, which is 3.8% ROA as per one future margin cost. Next one is 23 May. That is today we got the trade. This is what we discussed 22nd. 23 is today. Just completed date. The end of the week, the Friday, we got around 4 or 5 trades we got today. One is stopped out, remaining all are successful. First one is HFCL. This is a daily high liquidity supply zone. How our software identified this zone? As a rally candle, 1, 2, 3 base candles, drop, or maybe rally 1, 2, 3, 4 base candles and a drop candle, follow through candle. This is how our software identified this zone. And this one is fine tuned. Somewhere here you have fine tuned zones. Let me go to the 5 minutes time frame. So in the fine tuned 5 minute zones, if you observe carefully, all these are all 5 minute zones. We are in the 5 minutes time frame. So here inside this entire daily supply, we have 275 minute zone. This is the one, this is another 75. Within 75, here you have a 15 minute zone, second 15 minute zone. This is the first one, this is the second one. See here, this is the lower time frame origin. Inside these 15 minute zones, see here we have a rally base drop, fine tuned zone, but that has already tested. So we don't plan a trade here. And what about here? Rally base drop, imbalance started from this candle and followed through. This is the area we are planning this trade. In case if this is violated, within this origin, this is the origin for this 75 minutes fine tuned zone. Drop base drop. See, from the origin it picked up the orders and prices came down. So that's why we want to plan a trade here. And this 15 minutes, which is the origin for this entire 75 minute zone, also having one more order flow, rally base drop. Suppose if this is violated, here you can plan a trade. The only zone we are not planning is this is the one. Why? Because it is already tested. Rally base drop already tested here. There are higher chances this zone will be violated. That is what you learned in our lesson 16, when a zone can be violated. See what happened today. See, the one we expecting is violated here today. And we got a trade from this 5 minute zone. This is a 15 minutes time frame. Here we got a trade, but did you notice slightly it is pierced, but it is within stop buffer only. After that it reached the 15 minutes target, and not only that, till this fine-tuned 5 minute zone, till the 15 minute zone, it gave you 8.64 RR. See the RR here, risk reward. It is 8.64 RR it has given. Risk reward till 15 minutes target. And it achieved this entire target. Excellent, right? That way HFCL gave you 8,964 rupees profit as per one futures margin cost. And written on the ROA as per one futures margin cost is 5.5%. ROA it has given. HFCL. Sorry, 6.5%, not 5.5. It is a typing error. Let me correct the mistake. 6.5%. That is what I am wondering, from where this 5.5 came. See, here it is 6.5. Because Excel sheet is the calculated values. Always I note these are the accurate values. And while typing here I made a mistake. So it is 6.5. Corrected this. So this is HFCL trade. After that we got a trade from Glenmark also. Glenmark is also moving between high liquidity demand and supply zones. And this is a rally, 1, 2, 3, 4 base candles and a rally. This is how our software identified this 75 minutes. And Glenmark here we have a fine-tuned 15-minute zone, another fine-tuned 15 that is having a fine-tuned 5-minute zone. So either side you can plan trade. Today prices entered into this 15. Unfortunately, this 15-minute zone, the order flow is not good. So that's why we didn't plan any trade. Otherwise, we would have got another good short trade here. So that's why I didn't consider this trade. Okay, first let me tell you here. We have a fine-tuned 5-minute zone here, rally, base, rally. Today prices came and this is violated, this zone. Fine-tuned 5-minute zone is gone. This trade is stopped out today. Because it is stopped out, we got a loss minus 1.1%, around 1040 rupees, which is minus 1.1% ROA as per one futures margin cost. See the Glenmark. After that, what happened? After that, prices move up. Again came, see, already it is stopped out. Again moved up and again came down. Further came down, and here a new 15-minute zone is created. And within this 15 minutes, we have a fine-tuned 5 minutes drop, base, rally. Did you notice? Drop, base, rally. What is this concept called? This is called dynamic zone creation. What is dynamic zone? New fine-tuned zones inside the zone during the live market. We call them as a dynamic zones. So that is what? Glenmark dynamic fine-tuned 5-minute zone. It created during the live market. That's why always you need to observe all the stocks, what is happening. Any new dynamic zones are created. If a new dynamic zones are created, immediately you should add your analysis on the chart during the live market quickly. Because sometimes prices retraces, they give you very good trade opportunities. Of course, rarely they will stop out, but many times they give you good successful trades. See what happened today? Prices came, it gave you a trade. After that, prices moved here, but slightly PRs, did you notice? But it is within the stop buffer. After that, prices were started moving, and finally reached here there is a 15 minutes target zone is there. It reached the 15 minutes target zone. Here you got the trade, and here it reached the 15 minutes target. That way Glenmark gave you 3,867 rupees profit, which is 4.1% ROI. You may ask, profit is small compared to others, but ROI is more. The reason is the future margin cost is maybe around 85 lakhs, or 85,000, not lakhs, around 85,000 rupees or 86,000. So that's why you got more ROI here. That means your investment is less. For the investment, for this profit, you got more ROI. So this is about Glenmark. And you got one more trade, Hindalco also today. Hindalco is a 75 minutes high liquidity supply zone, drop 2 base candles and a drop candle. This is how our software identified. And here we have a fine-tuned 5-minute zone. Let me go to 5 minutes time frame. See here we have a 15-minute zone. Inside 15, we have a 5-minute zone. Actually, here you have to consider this as a leg-in. But why I consider this as a leg-in is because the price moved in a balanced way. Do you remember lesson 2 in our phase 1 training? There I explained the balance and imbalance. Price moved in a narrow range balance and imbalance took place here. The advantage of drawing like this, risk is minimized. Especially balance and imbalances are useful to you for risk management point of view. So that's why always I say lesson 2 is my favorite lesson among all our training lessons. That is the key. If you understand the key, maximum supply demand zone concepts you understand in a perfect way. Many times people see leg-in is big here. These are the base candles. You have to draw the zone like this. That way we say many times. But if you draw this entire zone, see how much big risk we are adding. But where the real institutional order flow, here actual balance took place. So that's why always I look into the first balanced when I am fine tuning. Before balance, the leg out is not, leg in is not proper. Still I compromise and draw, but my leg out should be perfect. I should not compromise, especially in 5 minutes time frame. So it is a perfect drop, follow through candles. So that is the way here we are planning. And today, because you are doing these kind of adjustments, when you do risk management, risk is very small, add small entry buffers also. Otherwise, sometimes you will be missing the trades. See here, small entry buffer, otherwise you will miss the trade. Price came here, gave you trade, several times price stayed here and then pushed it down. Reached this 15 minutes target, drop base rally. This is the 15 minutes chart. Drop base rally is the 15 minutes chart. See 15 minutes zone, rally base drop. Inside this rally base drop, previous slide, see here I fine tuned to 5 minutes zone. Okay, anyway, here you got the trade. With small entry buffer you would have got the trade, reached the 15 and it gave you 1:4.2 RR. It has given risk reward 1:4.2 till this 15 minutes zone. So till this 15 minutes target zone, it gave you 7,350 rupees profit, which is 3.9% ROA. Here you see profit is more, but ROA is less. Earlier, did you notice? Profit is less, but ROA is more, because here future margin cost is only 86,000 rupees. Maybe Indalco, the profit, even though 7,300 profit, only 3.9, close to 4%, maybe the margin cost could have been maybe around 1.8 or 1.9 or close to 2 lakhs rupees. Due to that reason, your ROIs will be increasing or reducing. But if you look into the profit, you feel like, okay, we got 7,000, very good profit during intraday. That way, that kind of feeling we will get. ROI is always important. How much profit you got on your investment, that is important. Okay, next, last one is Nifty Next 50. This is also a 75 minutes high liquidity supply zone, drop base drop and follow through candle identified by our software. And this 75 minute zone is again fine tuned with 5 minutes time frame. Let me go to the 5 minutes time frame. See here we have a rally, 3 base candles, drop and follow through candles. The 5 minute zone. And today prices entered into this zone at 9 o'clock 30 minutes 5 minutes candle, sorry 15 minutes. This is a 15 minutes chart. 9 o'clock 30 minutes 15 minutes candle, you got the entry. After that prices came down and reached this 15 minute zone. See here you have failed ERC as a rally, 2 base candles and a rally candle. 15 minute zone is the target zone. And also your trade is also completed in less than 45 minutes. So Nifty next. Actually after that, did you notice once again prices reached here? If anybody would have taken a second trade, most of the day you might have been struck up here. Maybe you might have got small profit. You might have collected over somewhere here, prices are holding. You might have exited somewhere here. You might have got a small profit. At least you would have collected over taxes, everything, whatever security transaction charges, brokerage charges, whatever the profit you got, that could be enough. Still you might have got some more profit, but negligible profit, that is. So that's why I'm not considering this trade, because it is like no profit, no loss. Second trade. First trade is gave you excellent profit till the 15 minutes target zone. That way Nifty Next 50 gave you 8,361 rupees profit, which is 3.8% ROA. See earlier 7,000 profit, 7,300 you got 3.9, but here 8,300 rupees profit, but still 1.1% down. 3 point. The reason is here margin cost is more. Nifty Next 50, the margin cost was around 2,20,000 or something is there. That's why your margin cost is slightly reduced. Fine. So these are the HLQ zones what we got. Let me show you the Excel sheet. This week total from 19th onwards, see 19th this week, total you got 13 trades. Suppose if you would have taken all the 13 trades, including these stopped out trades, you would have got profit 56,700 rupees profit you would have got, because 699 means 700 approximate round value. 56,700 rupees profit you would have got in case. Of course, taking all the trades are not practical, because today some of the trades are almost executed. I think couple of trades executed at 9 o'clock 20 minutes. Mostly you would have selected only any one trade. But I'm just telling you, if you would have taken all the 13 trades, we would have got 56,000 rupees profit during this week. Okay. So this is the end of the video. Hope this discussion might be helpful to you. Let's all meet again in the next weekend. Next weekend I may not be available. Actually, I need to make an announcement. I should have done in the beginning. This week, this coming week, I will not be available for almost 4 or 5 days. 30th I won't be available. 31st, the first also I won't be available. 2nd, that is July. This is April. Sorry, June, not July, June. June 2nd and 3rd also I won't be available. I will be out of the station. 4th only I will be back. So due to that reason, I may not be in a position to publish next week video on time, or what I do on Thursday, if time is available, Thursday I will try to record the video. That is one option. Or after I come back from my vacation, probably I have to do the video recording. And also you should understand, last August we started a premium service. Till the month, not even a single report is broken. Few days in between, because of some delays in the data or other reasons, or sometimes maybe due to my personal reasons, few delays are published. They're delayed and published. At least before 5 o'clock I published. Only elections declaration day, special, not elections, budget day. During the budget day, the government conducted a special trading session, NSE. I didn't realize, that's why that day, around half an hour delay, I published the report, especially HLQ zones. We got huge profits on that day, HLQ zones. But otherwise, the services are on time. But this is the first time I'm taking this break. So my apologies for all the members. But anyway, I have given assurance, minimum 15 trading days. If I don't publish minimum 15 trading days, next month you will be getting, you need not pay any money. Even then, I provided my service sincerely without any delays. But this is the first time I am getting delays, so kindly excuse me. Those who are planning to go for Zone Premium subscription, please do it immediately. I will be providing reports starting from today onwards, so that you get extra reports during the month May, so that some compensation will be there for the new members at least. For ongoing members, at least you have to excuse me for the delays, because 3 trading sessions you may not be getting reports. First trading session, May, where is the May month here? May 30 weekend report you won't get, and June 2nd and 3rd you won't be get. 4th I will be back. 4th onwards you will be getting the reports. Okay, this is about HLQ zone analysis video. Hope this information is useful to all the members. Let us all meet again in our next video. Thank you.